Inside America's Boardrooms, the informational show for board members and corporate secretaries. Brought to you with Knowledge Partners, NASDAQ, the Center for Audit Quality, and PwC. Along with content contributors Equilar, Meridian Compensation Partners, Wilson Sonsini Goodrich and Rosati, R.R. Donnelly, and the Society of Corporate Secretaries and Governance Professionals.
Welcome to this edition of Inside America's Boardrooms. I'm TK Kerstetter, the CEO of Boardroom Resources, and it's my pleasure to welcome you to the show. Today we're going to be talking about shareholders, and shareholders have spoken on what matters. And joining me to talk about that and some proxy information is Jim Copland, who's the Senior Fellow and Director of Legal Policy for the Manhattan Institute. The Manhattan Institute is a think tank whose mission is to develop and disseminate new ideas that foster greater economic choice and individual responsibility. And Jim, welcome, but the most interesting thing, I think, is that you work with something called proxymonitor.org, which is a unique, publicly available sort of tracking system to follow shareholder proposals for the top 250 companies as identified by Fortune. Is that correct?
That's right. What we track are the 250 largest publicly traded companies. So it's more like the Fortune 280 or so. Obviously some of them are privately held companies. So we take the 250 largest as tracked by Fortune, and we have a sortable, searchable database that's available to the broader public. We launched it in 2011 with the top 100 companies, and now we've built it up to 250, and we're going to probably stay there. Obviously the composition of our database affects some of the numbers we'll talk about that we pick up in terms of shareholder proposal activity, et cetera, because big companies aren't targeted the same as smaller companies. But if you're an average diversified investor, this is going to capture a lot of your portfolio. So I think from the investor's perspective, this is a pretty good data set.
So Proxy Monitor looks at the shareholder votes. Does it look at anything else, or is it basically just looking at shareholder votes?
Really what we're tracking are shareholder votes on shareholder proposals that are introduced under Rule 14A8. We also do track the executive compensation advisory votes, and we look sort of more systematically through some of my reports at other issues that are going on. But principally what we're interested in are these shareholder proposal activities. And when folks approached me about this some 7-8 years ago, I said, well, I want shareholders to have a voice, but I want them to have a voice in certain areas, maybe not in others, and I want boards to have authority in other areas, and I'm not sure what the right answers are. Let's look at this empirically. And that's why we built this database and said, let's just open it to the public. Let reporters, researchers, anyone who wants to use the same data we are.
Well, when I was looking at your latest report of the top 50, it was interesting to note, for me at least, that the compensation and the corporate governance shareholder proposals were actually outnumbered by the sort of what I call social policy, social change, which includes environment and political spending. Talk a little bit about that, and is that, I would think that would change if we went past the 250 into the small companies.
Yes, it would change if you went to the smaller companies, because the social investing funds and certainly these groups of nuns that introduce social proposals tend to focus on the larger companies, the sort of headline companies. Particularly a lot of the big oil companies and energy companies get a lot of environmental proposals. For instance, they tend to be large market cap companies. So that is going to change somewhat, but what we've seen, and it's pretty consistent year to year, that the environmental proposals and more recently the political spending proposals are the most numerous proposals introduced in terms of shareholder proposals on the ballot, followed by sort of a catch-all group of corporate governance and executive compensation related proposals.
But all that switches when we start to look at what shareholders support.
Absolutely. So this year you had 58 environmental proposals at the Fortune 250 through the end of the proxy season, through the end of June, and you had 54 political spending proposals, only 25 proxy access proposals, but 12 proxy access proposals got majority support. That's a little bit down actually from last year, but overall there were only 20 that got majority support, and 18 of those involved corporate governance concerns. One of the two others was a proposal that was actually, the board said we don't care. They didn't oppose the proposal, so that's why I got majority support.
So one of the things I wanted to talk about is proxy access. And proxy access certainly in the last 2 years got quite a boost by the New York City Controller's Office and in their New York City pension funds. They're filing approximately 75 shareholder proposals, and it sort of appears that they're working their way down from largest to mid-cap, and I assume they'll keep going into the small cap as well. Is that sort of how you see it, is that they've sort of attacked this type of situation?
I think that's basically right. They sort of took screens into play, and these screens were not necessarily share value screens from my perspective. Some of them were. They were looking at, for instance, what the executive compensation advisory vote was the year before, but they were also looking at things like climate change sensitivity, the number of women and minorities on the board, issues which are important for the company, but not necessarily where you would try to say we want to contest directors based on this. But that's really what they were focusing on. They did 75 in year one, 72 in year two, half of which were sort of repeats from the prior year. And so, but we've seen a decrease in the number of these proposals in our database. Part of that is because more big companies are adopting this and they're moving down to smaller companies, as you suggest. Part of it is that companies are agreeing to this and negotiating with them, because last year about 2/3 of the shareholder proposals involving proxy access got majority support.
And I think we'll continue to see that. I think a lot of companies are coming to the reality that this is coming, and why not control it themselves versus be caught in that situation.
That's right, and it's important for directors to realize that they do have some degrees of freedom here. They don't have to necessarily adopt the proposal on the shareholder ballot. They don't necessarily have to follow the SEC's rule that was voided by the DC Circuit Court of Appeals. They can adopt different percentages of the board, perhaps different numbers of holding periods for the stock or percentages of the stock. There's some give there, and a number of companies this year were successful where a shareholder proposal differed from a board adopted proposal.
Yeah. So after proxy access, what have the shareholders said is the next most popular sort of support of shareholder proposals?
Well, in terms of percentage support, you still see a trickling in of proposals on things like majority voting for directors, declassifying the boards, electing all the directors in 1 year, that tend to get a pretty good bit of shareholder support. Often they can get majority shareholder support for those sorts of things. We did interestingly see this year our first political spending related proposal, a basic disclosure proposal that got majority support. That's a first for us. Normally these shareholder proposals related to these social and policy issues don't get majority support. We didn't see, however, any overall uptick in support for those types of proposals, and on average 77% of shareholders are voting against them. So that shows that there's an idiosyncratic perhaps thing going on with that company, and maybe it counsels against a bright line rule that the SEC has a rulemaking petition in front of it. A number of senators are pushing on that, but it probably counsels caution. The overwhelming majority of these, hundreds of them, aren't getting majority support. More than 3/4 of shareholders against them, but we did get one that got majority support this year.
How about looking into your crystal ball, and what does the data tell you when you make prediction for the future? Anything really jump out at you?
Well, the one thing I'm going to watch in terms of the shareholder proposal space are these proposals related to the environment, particularly on greenhouse gas emissions or climate change sensitivity. I think that the proponents here have gotten a little better in terms of how they craft these. They're sort of framing them in terms of financial risk reports at this point in time, and that's making it a little more plausible for some of the institutional investors to vote for them. And so this year we actually saw 5 of those proposals top 40% in the vote. Still none have gotten a majority with over board opposition, but we're seeing a bit more support there, particularly in these greenhouse gas climate change types of proposals. And that may be related to mutual funds or other institutional investors being cautious, not wanting to be targeted as being anti-green on some of these proposals, particularly in an environment where you have state AGs like here in New York, Eric Schneiderman, and in California, Kamala Harris, targeting companies like ExxonMobil with litigation, with enforcement under state laws and things like that. Some of these mutual funds may not want to get a big public campaign against them, so we may be seeing an uptick in that support. Again, we're still seeing a majority of shareholders consistently voting against these environmental proposals, but it's something I'm going to be watching in addition to some of the things that are pending at the SEC.
Yeah, we'll have to see. Sometimes a black swan event can change public opinion pretty quickly, so we'll hope that none of those happen just for the sake of the country, but it does have influence. Well, Jim, you always give us a great report. I appreciate you taking the time to come join us.
Thanks for having me. As always, I appreciate being back.
And that will conclude this edition of Inside America's Boardrooms. We hope you enjoyed the show. We'll be back again next week when we take a look at another critical topic that'll help you be a better board member or committee member. So we'll see you then.
Join us again next week for Inside America's Boardrooms. Brought to you with Knowledge Partners, NASDAQ, the Center for Audit Quality, and PwC. Along with content contributors Equilar, Meridian Compensation Partners, Wilson Sonsini Goodrich and Rosati, R.R. Donnelly, and the Society of Corporate Secretaries and Governance Professionals.